Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
What day is it? What day is it? It's Hump Day. Welcome, everybody, to the Hump Day edition of the Daily Market Commentary. I'm your host, Chuck Folkers, and everybody had an amazing trading day yesterday. We're going to do what we do each and every day, taking a look at some 10 to 12 futures markets from an educational perspective, identifying potential breakouts and reversal trades. So let's go ahead and dive right in. So yesterday we went a little bit quick through the DMC, primarily because there wasn't a whole lot to talk about as we were waiting on breakdowns or breakouts in the equity markets and then some reversals in the currency markets. There was not a whole lot going on from a trader's perspective. So one of the things that we said was you just got to wait. You got to be patient and wait for things to occur. So starting with the S&P yesterday, we finally did get that breakout that we had talked about, breakout on the S&P. Now, we broke out and then just did a little bit of nothing before then our really strong breakout. And if you recall, yesterday in the DMC, we had talked about the fact that if you got in, there wasn't a whole lot happening. But we still weren't anywhere near where our stop would be, right? And then we got a pretty nice move down. Now, we got a pretty nice move down into our confirmation area. So we came down to our confirmation long area, but this level was invalidated before entry. So one of the things that we do at Traders Army is we have a private trade feed that we update every day. And I want to share this private trade feed just because I want to show you kind of what our update looks like. And at 10:27, we said that the demand area we set as a confirmation this morning did not make entry before reversing higher. So when we look at it, what we mean is that we had, let me go to a smaller time period so it's a bit easier to see. We hit here and we then reversed higher. Right? So we hit it and reversed higher. That was the second time that it happened. It had already happened once where we'd hit it and didn't get the fill. So this was a confirmation entry to begin with. We hit it here and didn't get the fill. This was the second time we've touched it and didn't get the fill. So anybody who looks at levels knows that the more often that a level gets hit, the weaker it's going to become. Right? So what we said here is this is the second time this level's been retested now, and we will invalidate any long trades from this area due to lower probability of a reversal again. But if we get basing in that area, it could be a good candidate for a breakdown in the near future as long as there's a decent reward to risk ratio. So my point behind that is that we had to invalidate that level. And so as price came into here, that was no longer a valid trade. That level was no longer going to be one that we were looking for a long opportunity off of. So that's really what we were looking at in that area. It's the rules, right? The more often a level is hit, the weaker that level is going to become. And it was hit yet again with a move away before any entry had occurred. And so now we're marching a bit higher early this morning. When I look at it on a 4-hour time period, which is my big picture, what we can see is that we've put in a lower swing low. We've not put in a lower swing high. I would be interested to see right up in here if we do get a bit of a reversal there and start to come down. We are sitting at quite literally right about now, as I'm recording this at 4:53 Eastern Central Time, we're sitting at a potential reversal point right now on the S&P after a recent spike here as the markets rallied up right off of the European market open. So for where we are at the moment, I'm going to take and look at up here as really, if there's a chance at getting short, it would be this area up here off of the breakdown, right? That would be the area to get short, knowing that we're shorting right near an all-time high. So you're already a bit lower in probability on a reversal trade when you're shorting near an all-time high. The breakdowns are better opportunities when you're at this kind of a price level. So we could also look for a breakdown below here if we base below this region. Okay? Now let's take a look at the NASDAQ. So in the NQ, we did get our breakdown in the NQ, and price moved away from there very well. And so same picture, we're rallying back up. Now the NQ put in a really nice wick over wick area down below the pivot high. So you have your pivot high and then a wick over wick level and then another drop. Now this is frustrating, right? We came really close to what our fill would be right here, and then price just boom moved away. You could have been a bit and taken a slightly larger zone in here and gone all the way up to there, and then you would have gotten filled. Leave me a comment down below. Did you get filled on this long reversal here in the NASDAQ? I did not have that set up as the entry point. I was wrapping my lines just around this one little doji that's the middle of the zone, and I didn't take the wick that's up above here. So since I just did this one little doji, I did not get the order filled. Matter of fact, I missed it by about 2 ticks on entry, and those are going to happen, right? Where you're going to miss those couple of ticks on an entry off of a level. But now as we're starting to head higher, so this level here needs to be changed to a confirmation because we came very close to it. Even though we didn't get in, we came close enough to it that we'll switch it to a confirmation. And if you do want to try your hand at a short, then you're going to want to look potentially here, and then you've got your pivot high. Your stop would be above that pivot. I feel like those are the 2 best areas. Now, understand that once again, when I look at the 4-hour, we are still putting in. This is our first higher or lower swing low. So just because we had our lower swing low doesn't mean that we have a lower swing high as of yet. And technically, you're still going against the upward trend if you try shorting against that big picture upward trend direction. So let's go ahead and take a look at some commodity plays. So one of them is crude oil. Now, this crude oil level here is the price target from our double bottom. If anybody remembers, we had on our 4-hour chart, we had laid out the fact that crude oil had come to a very cleanly defined double bottom, right? Winner, winner, chicken dinner, right? A very cleanly defined double bottom. Well, that double bottom that we had talked about, that cleanly defined double bottom, has a measured move. And the measured move on those double bottoms is typically you take the distance between the lowest part of the W, which is down here, and the top. And that distance that's between those 2 lines, which in this case would be from here to here, that's a measured move. And on the breakout above there, then that gives us our target, and which is right smack where we've just landed, right? So I can actually make it a little bit more obvious when I draw it out here. So here's the top. And what we'll do is we'll just take a measured move from here to here, so the top to the bottom, and I'm going to right click on this and duplicate this drawing, and now move it up. And so this is where we got our level for price coming into this range. So with that being said, we said, okay, well then that's definitely a price target for a long. We may get a little reversal for a short out of that level. But one of the things I talked about yesterday, in the daily market commentary, was I didn't love the basing we were getting before the level, and that was going to weaken the probability of that level working out. And that's exactly what we've seen happen. Price came into the level, 1, 2, 3, 4, 5, 6. If you use your 6 candle rule, you are already out for a very small loss. And that's the purpose of the 6 candle rule, is to minimize your losses. And you should already be out of this particular position. So I'm going to remove this line in this area. To me, this one's no longer valid. I'm not even going to switch to a confirmation. It's just no longer valid going forward, as I would be looking now for price to get up into that 60 range. Where is a decent reversal? Well, we've got a really nice reversal down here at 55. I really like that level. for a potential reversal point. If I slide down to the 15-minute chart, we had the origin of this big strong move higher at the end of the day. So this was right at the end of the trading day yesterday. Huge thrust higher in crude oil. I don't really like to lean on end of the day levels. They're typically going to be a bit weaker without giving me as much probability. And then we fell at the European market open, but with limited success, right? It fell from that area, but not a whole lot has happened. And so now we're just kind of chopping along. So I don't really like enough on the 15-minute levels to kind of get me into any of these positions. I am going to be keenly aware of the fact that this is an old area of resistance. Let's see if this acts as support. This could actually make for a breakdown area below here if we start basing on this line. So keep an eye out for that. In gold, so here's our gold level. We had this little tiny level here in gold where prices rallied up through. We chopped, and then boom, popped away. We're now chopping again in front of that level, so I'm going to remove it completely. The other thing I'm starting to notice is I see tremendous numbers of I'll call them gold bugs that are already on board about how gold is now going to all-time record highs because of our big breakout. Now we talk about the big breakout, we're talking about this breakout as gold has broken finally above this weekly resistance point. And while I agree, I am definitely more bullish than I am bearish on gold. Whenever I start to, for the longer term, whenever I start to see websites all over the place talking about the bullishness of gold, I get a little bit concerned because it's like when everybody tells you it's time to buy, maybe it's time to look to sell. And so I think we could get a breakdown from this area here. I've got a little bit of a rising. What would that be? A bear flag pattern here that's kind of forming. It's not perfectly symmetrical, but look at that as a potential bear flag breakdown pattern from that region, taking us a bit lower. And I think a bit lower means taking us possibly even to the breakdown point. So keep an eye on that for a potential on a breakdown. If you do trade that breakdown, now this is the breakdown of a trend line. You can cut it straight across on your price level if that makes you a little bit more comfortable for your style. It's a little bit fuzzy here as to having 3 touches. That's the issue there. If you really want to just wait for a potential reversal, if the reversal play kind of fits your ilk a bit more, then you could look at this, some of these areas in through here, although not formed at a great time of day, maybe a decent reversal off of one of those levels in there. I'm okay with the breakdown on here because it's such small risk. In the bonds, so the ZN level, so our ZN level finally hit its breakdown position where we talked about this area here acting as a potential breakdown point. So if you took this, we did get basing before the level. Your stop has to be above the last pivot, which is way up here. And so we are 1 candle into the move, and remember our 6 candle rule from this point. So let me know if you jumped in on that one. Please put that in the comment section down below. Inside the Aussie, we had a confirmation short setup, as we can see this on the 15-minute chart. Now that level was a confirmation level, and price came into the zone, and we got a smoking move away. So depending on where you placed your confirmation entry, you may or may not have gotten filled. I will say I did not because it didn't get quite high enough for me to be acceptable on a fill. It was quite literally a tick away. But when we come a tick away, we hit it, made that much of a dent into the level. One of the things that we put inside of the live trade feed update is that our 15-minute supply area setups confirmation needs to be invalidated at this point due to a slight retest and drop away from the level. Next time price hits the level, it's more likely to break higher than reverse again. So that level was invalidated as per our rules, and so the next time we came into the level, you didn't be able to participate in any of this move up. What it does is it allows us to stay out of trades. See, sometimes what's more important than getting into good trades is staying out of bad ones. And following our rules keeps us out of bad ones, right? That's what I'm looking for. So on a 4 hour, we have a definitive trend direction of up. So really anything short is lower probability at this point anyway. And when I move to the 1 hour chart for potential reversals, I'm going to look right into here for now. Even though this is a little close to current price and not the best of levels, stop would be below the pivot. The thing I like about it is that it was formed right at the Australian market open. And being formed at the Aussie open is a good point. All right, next, the euro. So the euro, we had a 15-minute demand level, which worked out exceptionally well. It moved away with a 4-to-1 reward to risk. So this 4-to-1 reward to risk level, price came into the zone, gave it a touch, and then quickly moved to the fair price value area, which was the opposing side. And all that happened within about 10 minutes. You got a really nice touch and go level out of there for a small day trade. So now we need to remove this level. I'm going to leave the level on. However, I'm going to put a line down in here because I just want to see if this becomes a breakdown point. We're basing up here in front of it. So I'd be okay with taking some sort of a breakdown from this level, knowing, however, when I go to my 4-hour chart, that we are trading against the big picture in that case. But when trading against the big picture, breakdowns are typically going to be better opportunities than reversals. Okay? Canadian dollar, we have, danced around this confirmation entry and been unable to get into it. I think that we're sitting right at a place that could make for a breakout here to the upside. If you didn't get filled on any of this breakout here, which I'm okay if you didn't, I think that you still have a shot to kind of move higher. If not, I think on a reversal, you may get a little shot somewhere on a reversal level down at this 15-minute zone. This is probably the best right here because it's right at the European market open. All right, last and certainly not least, taking a look at the Great British Pound and the Japanese Yen. In the pound, we are still in between our areas of demand and supply. We came very close and unable to fill. So this needs to switch to a confirmation because we got close enough and didn't fill it. So I need to change my entry style. And now we're rallying a bit higher, closing in on this area up here. To me, this area up here is just a bunch of noise. I need to go a bit higher. And that's really where I'm going to find a better zone. So I'm going to put this here as a potential for a reversal. Looking at this reversal point. Oops, that's not what I wanted to do. 15-minute level. There you go. Make it orange or purple or whatever color that is. So that 15-minute level is now added. My 4-hour chart, I have a lower swing low, but I don't have a lower swing high, which means my definitive trend direction just isn't there. So, you can take this up here as a potential for a reversal. Japanese yen, we got our breakdown level, and so we are just into this as a potential breakdown level. If you got into it, you're 1, 2, 3, 4, 5 on the 6th candle. We broke really strong, so your stop should be at break even at this point, and this one should now be a free trade stop if you got into that position. So, all in all, pretty good movement yesterday. Let's see what occurs later for today. For those of you that are members of TradersArmy.com, keep an eye on our private trade feed. As you can see, that it was a very integral part of staying out of some trades yesterday that would have went against us. So keep an eye on that. If you're not a subscriber, go to Traders Army. Try us out. See if you like us. We're doing a promo. It's promo code SUMMER50 for 50% off the next 3-month subscription. So go give it a try. See if it makes sense to join us a little bit more regularly. So hope you have a great day, and I will see you soon.